Today, I'm going to show you a new way to look at your investments which takes into account the money printing added to the financial system. If our investment gains don't keep pace with the devaluation of our money, then all of our efforts have been for nothing. No point getting excited about a chart like this, when in reality, the results are like this. This is the M2 money supply. The figures are calculated using cash in circulation, cash in banks, bank reserves, and retail money held in money market funds. The M2 figure can be used as an early warning of inflation. The larger the M2 figure, the more money there is in the system. If this isn't matched by an increase in productivity, then there's now more money chasing not as many goods. Prices rise. Think of a set of old-time scales. Equal weight of money on one side chasing goods on the other. If you add more money, that side now weighing more lowers. The money's devalued. And the goods on the other side rises, and it's now worth more of the devalued currency. QE, or loosening, causes the money supply to increase, and QT causes the money supply to decrease. Now that we get that, let's get to some charts. Okay, so as you can see on the chart here, I've got the Great British Pounds M2 money supply, and you get to this by going up to the search and typing in GBM2. You can see it here, UK money supply. So as you can see, I've marked off where the pandemic was, and you can see this huge parabolic move that happened with all the money that was being pumped into the system, with all the furlough and everything that was QE pumped into the system to keep the economy going whilst they shut us all down. But let's have a look at the US money supply, and you know, look at that. So much money has been added to the system. Just before the pandemic, we were on $15 trillion in the system, and we're currently at 21 trillion. So literally a quarter added to that money supply in the 3 years since the beginning of the pandemic. But what you can think of is, with these money supply charts, if you were to flip that chart, you can basically think of that as your money being devalued. Purchasing power of $1 or £1 going down at the same rate as that money is pumped in. But that's not why we're here. We're here so that we can have a look at our investments. So let's start with the S&P 500. So here we are. We've got that on the chart here now. And as you can see, you know, that's a superb chart, right? That's exactly what we want to see when we're looking for something to invest in. Right here, you can see I've got the 2008 financial crisis, and we've got the pandemic here. And pretty much you could have invested at any point over this period, and right now you would be in the money, right? You would have made money. So this is the S&P as a function of the money supply. And the way you do this is you type in S&PY to get the S&P 500 as you would normally, and then you type in /M2. On this chart, we are actually below the level we were at in 2008. So let's have a look at the S&P again. So in reality, the money we put in, if we put in $100 in 2008, we actually haven't made any increase in the purchasing power of the money that we've made. Let's say we've now made $200. It doesn't matter, because that $200 is only worth the same amount of goods as you could have purchased in 2008. Okay, so that's what this chart shows. So with the money added to the system between the 2008 financial crisis, COVID to today, you've not actually made any gains in money over that period of time. I mean, you could say, and you can say, that your money has been protected over that time. If you'd have just held dollars under your bed, the purchasing power of those dollars, you'd have lost a hell of a lot over that time. But by having your money invested, if you hodled and you didn't trade around, if you had that money invested in the S&P 500 in 2008, all the way through the crashes, back up to today, you would have at least protected the purchasing power of your money. Let's take a look now at the FTSE 100, which for my fellow countrymen is analogous to the S&P 500. And you can see here, again, the chart's pretty good, right? It's up and to the right. You could have, despite this huge amount of volatility, you could have basically made money at any point over this period. But let's now look at the M2, and you're going to need to brace yourself. So here is the FTSE 100 as a function of M2. And as you can see, here is the 2008 financial crisis, and it's been nothing but down and to the right ever since. And that's crazy, right? If we look back at that chart again, you can see that on this chart, we've actually managed to recover and get above where we were in 2008. But in reality, given all of the money and the devaluation of the currency that's happened over that time, despite the gains, we're actually below where we were in purchasing power. Having your money in the FTSE 100, given all of the money that the UK government has pumped into the system, you've not made any money, and you haven't even managed to protect your purchasing power. But let's have a look at this. I've marked off two areas here which I thought were really interesting to look at. So first of all, we'll have a look up here. So this is 2000. So you can see that this is the high point on this chart with the M2 money supply taken into account. This is the chart without the M2 money supply taken into account. So if you'd have invested here, right now you'd be thinking, at least I've managed to break even, you know, I've got my money back and all the rest of it. But in reality, you're way, way, way below that level in purchasing power. So let's look at oil. And as you can see, we've had the huge market crash in 2008, brought us down to here. And then COVID, if you remember, no one was going out, so no one needed oil. And you've had this massive wick down. Let's look at the chart now, and you can see that we're about break even with where we were during COVID. So here we've made money, but in reality, with purchasing power, we've lost money. And oil has actually done better than most commodities because, you know, everything that's happened in Ukraine and all of the inflation and OPEC and everyone else reducing the supply to increase the demand. Oil has been a really good investment throughout the years. It's basically stable, so it's protected purchasing power over that time. Haven't made much money, but you haven't lost any money. It's kept up with inflation. Let's look at gold. The chart is up and to the right. Again, exactly what we want to see. You could have bought as a hedge in 2008 against the financial crisis. You could have bought as a hedge against the pandemic, and you'd be pretty happy right now, right? Doesn't look quite the same when you take into account, again, the huge amount of money added to the system. You're actually, right now, we are below where we were in 2008 and below where we were just before the pandemic. So here's 2008. If you'd have invested your money right then, right now, in gold, your purchasing power, the value of your goods and what you can buy with it has gone down. So even though gold is a good investment over time, or it's at least a good vehicle for protecting your wealth, right now in 2023, we're at the same level, the same values as 1993, 1992. So if you'd have bought an ounce of gold in 1992, over that like 30 years, that amount of money you invested hasn't increased in what you can buy with it. It's just kept and maintained that purchasing power. If we look back to here, so this was the 1st of December 1992. So let's have a look at how much 1 ounce of gold was in 1992. Is right here. So you could have bought 1 ounce of gold for around $330. Right now, gold is at $2,000. But despite that massive gain of $1,700 per ounce, your purchasing power hasn't improved at all. So what you can buy, what goods you can buy with that ounce of gold hasn't increased over the period of time in which you've held it. Although it's protected our wealth from 1992 to 2023, which is amazing, it hasn't made us any money, which really is what we want to do, right? We want to increase our wealth. Let's have a look at Bitcoin now. As you can see, Bitcoin's up and to the right. The chart we want to see again. I mean, at any point over this period of time, you could have invested and you'd be happy, right? You'd have made money. People always talk about the volatility and danger of Bitcoin, but just zoom out on the chart and you'll get the real picture. But let's have a look at it with the money supply now. So this is with the money supply. And as you can see, it's probably the only chart which looks similar to the chart without the money supply taken into account. This Bitcoin is one of the only charts you'll see where we are actually above the level that we were at in the pandemic. If we have a look at gold, we are below. Oil, we are below, but basically break even. The FTSE, we're not even anywhere near. Just forget about that, pretend it didn't ever happen. And the S&P, we are below where we were before the pandemic. So Bitcoin is the only investment out of all of these ones we've just looked at that has beaten the amount of money pumped into our system and provided its holders with an increase in purchasing power. You know, they've tried to do QT, quantitative tightening. They aren't going to be able to do it for much longer. Banks are failing, banks are breaking. The whole system falls down because they can't even pay for their own debts when they raise the rates so high. So they're going to have to go back to QE again. They're going to have to go back to pumping thousands, billions, trillions of dollars and pounds back into the system just to keep the system afloat. And we need an investment vehicle which is going to not only keep up with that inflation, but improve our purchasing power over that time. And as you can see, Bitcoin is the only one that's done that. I hope you enjoyed this, guys. It's really a bit of an eye-opener, especially for me. So if you want to get to these charts, you just go up and type in whatever commodity you want to look at, like gold, and you type /M2 or GBM2. Let me know in the comments below what you think of this. Has it changed your mind on all these different investments? Has it changed your mind on technical analysis? Not everything is always as it seems, is it? We all want to make money and increase our wealth. My go-to for this is Bitcoin. I hope this has helped you guys. See you on the next one.